You're listening to a production of the National Media Archive. To learn more or volunteer, go to nationalmediaarchive.com. The Standard & Poor's 500 index reached a fresh record high, pushed upward by powerful performances from the giant companies everyone knows and by continued gains among smaller and mid-sized companies. One company that stood out is Tesla, which surprised the market by delivering more cars than expected for the second quarter. Over at Apple, an upgrade from a major research firm gave its stock price an extra push upward too. So the Standard & Poor's 500 closed at its new peak, with Tesla jumping nearly 5% after its delivery update, while Apple's stock moved up more than 2%. Over in the world of artificial intelligence, companies like NVIDIA and the company that runs the search engine and video site everyone uses also got a boost as excitement about artificial intelligence stayed strong. When we look at sectors, three areas really carried the weight. The energy sector rose by almost 2%. The materials sector also climbed, and the information technology sector had healthy gains too. Not every part of the market shared the good fortune, though. Healthcare stocks dropped by about 1%, pulled down mainly by big losses at Centene. Centene's leadership had to back off some earlier financial promises, which rattled investors. Banks and financial stocks were mostly flat, even though many banks announced they planned to raise dividends or buy back more of their own shares. Turning to jobs, a new report showed the economy lost more than 30,000 jobs according to a private payroll survey. But everyone's watching for a bigger picture from the government's full employment report for June, which should shed more light. On the political side, that so-called one big beautiful bill that lawmakers have been debating is still stuck in the process. No clear sign yet when it might move forward. Outside the United States, markets had mixed results. In Europe and Asia, some indexes edged up while others slipped. Meanwhile, commodity prices climbed. Crude oil went higher and so did gold, as investors weighed supply limits and global demand. Some well-known investors made moves worth noting. Jana Partners trimmed its stake in a major food company by almost 8%. Andreas Halverson's firm cut its position in a biotech firm by about 15%, signaling a possible shift in strategy for both. In company news, there is plenty happening. Alibaba announced a huge subsidy plan worth billions of dollars to help its quick commerce operations compete in China's intense food delivery fight. The plan should help both shoppers and the millions of small businesses that sell on Alibaba's popular shopping site. This comes as Alibaba faces strong pressure from rivals like PDD Holdings and JD.com. Lockheed Martin landed a massive contract worth close to $3 billion from the United States Department of Defense. The deal will cover software upgrades for the Aegis missile defense system, keeping Lockheed in its longtime role as lead contractor for this program. These upgrades will touch systems in places like Guam, Poland, and Romania. Private equity giant KKR made headlines too, agreeing to buy Spectrus, a precision instruments company based in the United Kingdom, for over $5 billion. The offer topped an earlier bid by another investment firm and came after two failed attempts, showing how determined KKR was to get this deal done. Tesla, meanwhile, saw its sales in China tick up slightly in June, marking the end of an 8-month slide. Even so, local competitors like BYD and NIO are growing faster and eating into Tesla's lead in the world's largest market for electric vehicles. As a side note, Tesla's founder has now taken over direct control of sales operations in Europe and the United States. This shakeup follows the exit of a key executive and comes at a tricky time for the company. The founder's involvement in politics has also affected the company's sales in some areas. Apple is facing a different challenge. Foxconn, the giant company that assembles iPhones, has pulled hundreds of Chinese workers out of its factories in India. This complicates Apple's plans to spread its manufacturing footprint beyond China, especially as global tensions around technology transfer continue to grow. SoftBank is dealing with fresh trouble too. The United States Federal Trade Commission has opened an investigation into SoftBank's plan to buy a chip company called Ampere for $6.5 billion. This deal is supposed to strengthen SoftBank's investments in artificial intelligence infrastructure, but now the probe could slow things down. SoftBank's top leader is pushing the message that this deal is crucial for staying ahead in artificial intelligence, which is why the scrutiny could prove to be a real hurdle. One of the biggest banks in the United States, U.S. Bancorp, says it will increase its dividend payment by 4% after passing the latest stress tests run by the Federal Reserve. These stress tests check how well banks can handle economic shocks. U.S. Bancorp is also keeping its $5 billion plan to buy back its own shares, which suggests the bank's balance sheet is healthy. The required cushion for unexpected losses, known as the stress capital buffer, will be lowered, showing that regulators see the bank as less risky than before. In the world of acquisitions, Thoma Bravo, a major private equity firm, is now in talks to buy Verint Systems, which makes software for customer call centers. Verint's stock price jumped sharply after hours once word of these talks got out. The company has been looking for a buyer as its share price has dropped more than 30% so far this year, so a buyout might help stabilize things. Meanwhile, Apple got another bump when a big research firm moved its rating up to a more neutral position, basically saying they expect surprise growth in iPhone sales during the third quarter. However, they also warned that sales might cool off later this year, especially for services like apps and streaming, even though recent global numbers for iPhone sales have looked solid. The company that runs the biggest search engine and video platform got hit with a big penalty in California. A jury ruled that the company misused smartphone data, gathering information from users without permission and causing extra costs. As a result, the company has to pay over $300 million. They are planning to fight back in court, saying that collecting that data was part of providing necessary services. In the healthcare space, Regeneron got early approval from the Food and Drug Administration for a treatment targeting a type of blood cancer called multiple myeloma. The approval came through the faster track based on good trial results so far, but the final sign-off depends on more studies proving it works and is safe. The medicine comes with a serious warning about potential side effects, which patients and doctors will have to weigh carefully. Merck is hoping for good news soon too. The Food and Drug Administration gave priority review for an updated label for its treatment for a rare lung condition known as pulmonary arterial hypertension. The new label is based on strong results from a big clinical trial. The agency's final decision should come by October 2025, and a positive outcome could boost Merck's sales in this niche but important market. In industrial news, Ingersoll Rand picked up an Italian compressor company called Termomeccanica Industrial Compressors and its sister company Adicomp for about €160 million. This move should help Ingersoll Rand expand its capabilities in the renewable natural gas space, and they expect the deal will quickly add value through cost savings and better operations. Coinbase, the big player in cryptocurrency exchanges, just bought a company called Liquify. This smaller company runs a platform that helps manage digital tokens. The purchase fits into Coinbase's bigger plan to become the go-to place for institutional clients in the blockchain world, although they did not reveal exactly how much they paid. In the latest round of analyst moves, the massive online shopping platform Amazon got a boost when a major investment bank raised its target price to $250 per share. This optimistic outlook is based on strong expectations for Amazon's performance in the second quarter, with online shopping and cloud computing both driving growth. Over at Microsoft, the company is preparing to cut about 4% of its workforce. The main reason for this cut is that its huge spending on artificial intelligence projects has squeezed profit margins. This shows how even big technology companies need to balance the cost of staying ahead in artificial intelligence with the reality of maintaining healthy profits. The company that operates the biggest search engine in the world, which also owns a major mobile operating system, is facing fresh trouble in Europe. They just made a new proposal to European regulators in an effort to dodge a big fine tied to antitrust rules. European regulators have been closely watching how the company handles competition and consumer privacy. Rivian, which makes electric trucks and sport utility vehicles, ran into a rough patch this week. Its second quarter production numbers fell short of what analysts expected, which caused its stock price to dip. This is yet another sign of how competitive the electric vehicle market has become and how tough it is for newer players to hit their targets. Mining giant Glencore made headlines by announcing a massive $1 billion share buyback. This came right after the company completed its exit from Viterra, an agricultural trading business. Investors are wondering if this move hints at a potential turnaround for Glencore's stock, which has faced pressure in recent years due to shifting commodity prices. Together, these stories show how the push and pull of artificial intelligence, electric vehicles, new treatments in healthcare, and shifting global trade are driving today's market. Investors, company leaders, and regulators are constantly trying to manage risk, control costs, and chase growth all at once, often pulling the market in several directions at the same time.